talk about how to profit off the psychology of markets. What does that even mean, right? I always say this every video, you know, in case it's your first time watching it. Woo! A little bumpy today. I'm in a different car today. But, so yeah, so what does that mean? That means just understanding, it's real simple. It's not a crazy explanation. All that means is that you're just trying to profit off of how people think, right? Trading the markets, the shorter your time frame, the more the psychology of the markets come into play. The quicker you gotta be, right? The shorter your time frame, right? So everyone's different. Everyone has different risk tolerance. You know, if you can't handle a lot of risk or a lot of volatility, you know, widen out your time frame. Go long term. You know, if you love risk, if you have a big risk appetite, then just trying to prevent this phone from sliding. Then just you know, try out day trading. You know, shorter term swing trading. But anyways, so yeah, in this video I want to talk about investing, right? And where you are in investing and how people think when it comes to investing as you get older, right? The traditional way is to think, okay, I'm about to retire, or retirement is getting close, or I'm getting older now, I need to take less risk, right? So I'm gonna put it into an extreme example here, where the older you get, and the more the further away you are from retirement, you actually have to start taking more risk, right? Now you're probably thinking, like, why? Why would I have to take more risk? Well, if you have zero in your retirement account, if you have no money in your retirement account, you're in debt, you're closing in on 40, 50, right? Even 40 years of age, you're getting up there. So if you have nothing for retirement, what the hell are you going to do in the next 10 years, right? Or the next 20 years, right? You have to start really changing up the way you save and invest. And with that, increases your risk. If you want to retire comfortably, right? By the time you retire, or if you want to retire comfortably, by the time you get to that age, you want to be well prepared, right? Even before you retire. So the further or the closer you get to retirement, you're gonna have to start taking more risk. You're gonna have to start investing more of your money, more of your income. Sorry guys, this is not my regular car. So yeah, so you got to think of it that way. The sooner you start, the better. You know, you got to start today if you don't have anything, right? But if you're not in that position, right, the closer you get to retirement, it's going to be worse off. And here's why. If you're 50 years old, right, and you got zero in your account, and you're saving like $500 a month and investing it into the S&P 500, getting 8% a year, it's not looking good. You know, the numbers just won't add up. You'll have some money, you know, if you got 10 years left to bring in some income, but $500 ain't gonna cut it. You're gonna have to, if you don't have the ability to save $500, you need to find ways to make more money, right? I mean, it's really that simple. It's cut and dry, right? So a lot of people, and even me included when I was younger, you think, you know, I'm in my 20s, in my 30s, I got time to save for retirement. No, you don't. No, you don't. You have to, no matter how small it is, even if it's like $100 a month, even $50 a month, the younger you start, the better. And you get into that habit. You build that habit up. So you have to understand that. You have to start, right? So yeah, the further away you're from retirement, the less risk you can take because you have time on your hands, right? I mean, people will say, well, what if you die in your 30s or whatever, right? I mean, I'm not taking that into account, right? Shit happens, yeah, that does happen. But just strictly speaking, if you're gonna live to like your 70s, 80s, right? You need to have enough to retire. Now, when you retire, hopefully you have other sources of income to help keep investing and bring in more money, right? Like if you're planning to retire and not work and not bring in any income after that, you got a big hurdle ahead of you if you don't have a retirement set up. So you have to understand, start investing now. And if you have to start and you only have like 5-10 years left in your working years, you're gonna have to take more risk. You're gonna have to take more of your income and invest it, and you're gonna have to invest it into assets that are more volatile. Because if you're gonna need to get bigger size returns, you're gonna have to invest in riskier assets. Not risky like penny stocks or anything. I'm not talking about that. I'm just talking stuff that's more volatile, stuff that has huge drawdowns, right? Growth names and stocks and crypto, right? That's what you're gonna have to look at investing in. Either that, or if you have a substantial amount of money coming in, right? Then you gotta do some math, right? You gotta figure out, okay, this is how much I got coming in. This is how much I can afford to take out without being on the street and investing it, right? Like, you literally have to invest as much as you can, and you gotta sell off, get rid of all your debt. Get rid of all your debt first, right? That's first and foremost. Anything over 5%, gotta go, right? You gotta pay that off. That's first and foremost. So that's another hill you gotta tackle. Once you get all that done, you start taking all your money and investing it. Save some for food, minimum. Go shop at the grocery store, cook, keep it healthy. Don't be eating like ramen and shit. But you want to live. The point is to live, right? You don't want to be sick. You don't want to be like unhealthy, right? So everything's balanced, and you can see how this can get a lot more difficult as time goes on. So you can see how it gets more difficult as time goes on, right? You have to start ASAP, but it's really simple. The numbers got to work. There's calculators out there where you can determine a rate of return, right? Average rate of return of an investment, how much you need in that investment, right? And you got to calculate, okay, this is my number that I need to retire, and then you got to invest towards that, right? And then when you get to that point, right, if you can get to a point where you can save and invest enough money to where you can just live off the dividends of your nest egg, even better, right? And that's something that would be more beneficial to a younger person, right? Because a lot of people say, oh, if I had $1 million, I could retire. Yeah, but how long will that $1 million last you, right? Like, if you just chip it away at that $1 million, when will it run out, right? Depending on your lifestyle, depending how you want to retire. So then you got to figure out, okay, how big of a nest egg do I need so it can generate enough returns for me to live off of for, not forever, but for as long as I want. And then I could pass on that nest egg to my children or, family, right? That's the way to do it. And that's why it's important to start early, to start in your 20s, 30s, right? Like, just get started and put as much away as possible, because you can do it in 10 years. You can get enough saved up in 10 years. You just really have to hunker down. And people think 10 years is a long time. No, it goes by fast, because when that 10 years passes and you're hitting 40, you're hitting 50, you're like, oh fuck, where did the time go? I got nothing saved up. So remember that. And you have to instill that level of fear in your heart. You got to think about these things, because people just shun it away. They're like, I'm young enough, not even going to think about it. I'll deal with it later, right? Next thing you know, it's 10, 20 years later, and you're like, fuck, I got nothing saved. I've done nothing for myself. I've put myself at a disadvantage, and now I have to work for life. I have to work till I die. And no one lays on their deathbed saying, I wish I would have worked more, or I wish I would have stayed overtime, right, and kept working, right? No one says that on their deathbed. So think about what's important in life, right? First and foremost, you have to get your time back, right? And you can do whatever you want with that time. But you have to have the investment to be able to fund your time, to fund, your life, right? As long as you can cover your expenses, cover your lifestyle, depends on the level of investment you need. If you have income coming in from little side jobs, cool. But the idea is, like, you have to get to a point where, like, your investments, your nest eggs can cover your critical expenses, right? Things that you can't negotiate on, like shelter, food, right? Those things. Fucking gas. You gotta get places, right? Unless you live in a public transit area that has good public transport, right? But anyways, I digress. It's wrong the way people are teaching and saying, as you get older, you need to take less risk. I think it's the opposite. The closer you get to retirement, the more risk you have to take. And if you don't have a nest egg built up, you got to take even more risk. And it's a crapshoot. The closer you get to retirement, it becomes a crapshoot. So, no one's going to come save you. And if they do, God bless them. So that's all I want to say. Hopefully it helps. I know it's a different format. Freaking phone was falling. I need a holder. Anyways, until next time. Take care.